My name is Sheila Gatu and I work for Zamara Actuaries. I'm also in the recently constituted reforms expert panel for the reforms of NHIF, and I'm going to take you through a bit of a background about NHIF and some of the innovation that the fund has seen over the last couple of years. I'll also talk about some of the things we need to consider even as we aspire towards universal health coverage. So what is NHIF? It's a social health insurer that covers Kenyans, and it's an independent state corporation that's established by an act of parliament. NHIF has undergone a lot of growth since 2006. In 2006, there was a targeted expansion drive towards the informal sector. In 2017, they introduced enhanced benefit packages. So for example, cancer, kidney dialysis, we could not get cover for that, but now we can. Outpatient cover was also introduced in 2017. And I must say that the only issue there is that you can only get outpatient services in the center that you're capitated to. They partnered with the Red Cross recently. Sorry, the enhanced benefit packages was 2015, and then emergency road rescue and evacuation services was 2017. They partnered with the Red Cross to do that. The main roles of NHIF, in a summary, is to receive contributions from members and then to be the custodian of those contributions and pay claims, medical claims as and when they fall due, and of course to pay expenses of the fund. NHIF has undergone a lot of innovation, although there's still a long way to go, but there has been great strides that have been made. So for example, for me to enroll on NHIF today, all I need to do is go online or use the mobile app that NHIF has, or enroll on the USSD platform. As well, their system is now integrated with that of the Directorate of Immigration and Registration, which aids in verification checks. And as the President said, there are efforts ongoing to integrate our national ID data with all other IDs, such as NSSF, NHIF. And so when that happens, that will really go a long way in aiding NHIF. Members are able to access any information that they need, such as member statements, the status of their account on their phone or online, and we can also pay for contributions online. This has gone a long way in increasing membership. So as you can see, in 2005, there were less than 1 million principal members under NHIF, but right now we have over 7 million principal members in NHIF. When it comes to claims, settling of claims has become much more efficient. So for example, healthcare providers are able to load their claims online on an e-claim system. And then as well, all the systems, the claim systems in NHIF have been integrated. Right now, if I go to a hospital, the provider doesn't have to call NHIF to check whether my membership is active. They can actually access the NHIF system and see that. And then very importantly for me as an actuary, my meat of what I do every day is data analysis. And so they have started using ICD-10 medical coding, which really goes a long way in analyzing medical data. All this has led to improved turnaround times for claims payment. Before NHIF, it used to take about 4 months for claims to reach NHIF. Now it takes even less than 2 months, and NHIF pays claims within 30 days.
Until last year, 2018, our enrollment had suffered a setback from 2012. Our enrollment figures had stagnated. In last year, 2018, we decided it was time for us to also introduce some digital technology into our enrollment process. So that's what I'm going to talk about. Most of you, I'm sure, have heard about Ghana's NHIS, our success stories, our challenges. A brief background, we have Ghana's NHIS has over 4,000 healthcare providers. You just don't provide services to NHIS members. You need to be accredited by the NHIS before you can do that. We cover 40% of the population as at the end of 2017. Currently, it's gone down by 4 percentage points to 36. As at 2010, we had 31% of the population. We operate through 165 district offices nationwide. We have over 3,000 staff across the district offices and the headquarters in Accra. We have a very too comprehensive benefits package. We don't even have an inclusion list. What we have is an exclusion list, so it gives room for a lot of interpretation. We cover outpatient, inpatient, medicines. We have a very extensive medicines list with over 500 medicines on them. Yes, and then we also pay, our payment systems are, we pay by GDRGs and then fee for service for medicines. In 2017 with... Okay, I was going to skip this slide, but it's important. When you look at our membership category, our biggest membership is in the informal sector, 31.3%. We have children, which make up the biggest actually, but they are not premium paying. They only pay the processing fee. So our biggest premium paying group is the informal sector. We have the indigent at the bottom. You can see pregnant women, SNIT contributors. Out of all these people, actually 68%, almost 70% of them are exempt from premium payment. So we basically don't get any monies from them. About 11.8 million members represented. Like I said initially, we've dropped down by 4 percentage points. That's why we felt we needed the technology. So in 2017, with support from the ILO, we embarked on the mobile renewal project. So what was the problem? For you to register as a member of the NHIF, you need to physically go to a district office close to you. This is because our cards are biometric, so you need to be there to take your biometric details. So you need to travel. You need to go there and wait in a long queue, sometimes for hours and even days for you to be able to get your card. And like I said, our largest premium paying group are the informal sector, whose incomes are tied to their presence at their workplace. So as I stand in the queue and wait to be registered or renew my card, I'm losing income. Again, district offices were overwhelmed. Staff, 9, 10, and then people will be, they will be taking care of more than 60,000 on average a week, people coming through the district office. This was too much work for them. Again, a large proportion of healthcare providers had no digital ways of verifying membership. Out of 4,000 facilities, we only had 300 who had a biometric system of authentication. So the rest were all visual estimation. They look at you and figure out whether you are the person on the card, and they can provide services for you. So what did we want to do? We wanted an efficient renewal method which was accessible to all members regardless of where they are. They didn't need to be physically present at the district office. So essentially this is what we wanted: something convenient, something affordable, and something easy for everybody to be able to do. We also wanted them to be able to do it without necessarily coming to our district office, because this is one of the biggest problems that we had, people traveling and coming there. So we wanted something they could do remotely. So we thought of the digital member validation. Now, if I'm able to renew digitally, when I get to the provider, he should also be able to validate me digitally. So we came out with the mobile renewal and digital non-biometric authentication. So this is what our problem looked like. These are actually people waiting at the district offices, long queues, rain or shine. They are standing there waiting for their turn to renew their cards. So what was the solution? The solution was in 3 parts. The first one was a renewal reminder. 3 weeks before your card, 3 months before your card expires, and again 2 weeks before your card expires. The second phase of the solution is for you to be able to pay your premium through your mobile money platform. The third solution, like I said, the provider should be able to also authenticate you. So we developed a digital authentication member feedback. Mind you, this is non-biometric. Like I said, we had the biometric. It was expensive. We couldn't scale it up. So in the meantime, we need to do something that we could allow everybody to use until we get the money to go biometric fully.
I suppose what differentiates Discovery in health insurance, or one of the pioneering innovations that we've come up with, is this concept of a shared value insurance model. So Discovery's been around for about 25 years, and one of the first innovations that we had was creating what they called a medical savings account. So for people who have health insurance, they could start with a insurance, a pocket or of savings that they could access at any point in the year. Even before the end of the year, they could access the full amount of that for any day-to-day costs. The next innovation that we've had is what we've called Vitality. It's an insurance model that we've, or a behavioral economics model, which we've now started exporting internationally. Basically focuses on providing incentives to the insured population to improve their behaviors, and as such reduce their insurance risk. And so the savings that we get as an insurer on the healthcare or the life insurance side gets passed back or gets shared with the insured members in terms of incentives. So they can get both short-term incentives in terms of a coffee a week or a smoothie, a voucher for this, that they can get by achieving weekly fitness goals. And if they achieve a high enough status on what we call the Vitality platform, they can then achieve discounts on flights, purchases in shops, and other benefits, which can make it quite an attractive an offering. So what we've done now is we've exported it to primarily mature markets internationally, so the US, Canada, Asia, Australia, and Europe. What our big opportunity is to create a solution that would be more appropriate for the mass market, because we understand that there is a significant disease burden still, a lot of communicable, non-communicable diseases that are applicable to this or in this model, addressed by this model, and we see that even in South Africa we have primarily addressed the private, more wealthy customers who would be using the private healthcare system. What we need to be able to do is to have a more mass market appeal for this. And so the innovations that we've heard from other parts of Africa would be very applicable to that market, who don't necessarily have access to data. In many cases, we're expecting people to be capturing steps using a smartwatch or some kind of a wearable device. In what we need to do is find ways in which you can create the same kind of incentives, find incentives that are valuable to that population group, and create a way that they can interact without having to incur the cost of data, for instance. So I think that's where the synergies with fintech players and insurtech players in the broader African context would be really valuable for us to be able to understand how we can translate what we've got in terms of significant actuarial data and behavioral economics modeling, but yet no good way to deliver that to a broad customer base. So that's really where we see this the synergies and potential opportunity for a model like Discovery.
My question is for Anthony. How, in terms of vitality and your liability, when it comes to people building their points and not necessarily accessing their benefits, has there been a challenge with that? Because I know like Safaricom locally had a challenge with Bongo points, where they had this huge liability where people never claim on it, but then they have rack up all these points. So do you have a similar challenge? Have you seen that, and how's that working?
What you can get by vitality points is it simply gives you a status. You achieve your what you can get through that is you get discounts, for instance. So primarily our incentives are in the basis of discounts. So if you get to platinum or diamond status, which is the highest one, you can get 30% discount on flights or serious discounts on running shoes, for instance. Our other rewards, which are kind of monetized, actually expire after a period. So after a month, your weekly whatever it is, coffee voucher or smoothie voucher will expire. And because it's all accessed via the app, it'll just say, oh, this is expired, or these things are coming up for expiry. So we've actually taken away that kind of glut of potential claim on that.
Having said that, I just want clarity from presentation on Kenya and Ghana, because the focus is on inclusion. And mostly you find that it is the poor who are left out. So I just want to understand whether, particularly the Kenya case, whether there is subsidy by government in paying premiums for health insurance, and the Ghanaian case, I don't quite understand. Is that a private entity which is in the business of health insurance, or is part government or anything like that?
70% of our funding is from the government, and the premium they pay is just a token. It comes down to below $5 a year. Yeah. So essentially, it's appropriate. It's not an insurance in the true sense of the word. And your other question was about. the inclusion, financial inclusion. I mean, for Ghana, the time was ripe for us to go digital. If you've read about the mobile money revolution in Ghana, we've also recorded very, very remarkable figures. In 2018 alone, we recorded 38 billion transactions USD on the mobile money platform. We have 13 million unique active mobile money accounts in Ghana. We have over 33 million registered SIM cards for a population of 28 million, which goes to show that at least each person in Ghana has a mobile phone. Voice data is universal in Ghana. Voice is universal, but mobile data is, data itself is widespread, but it's not equitable when you compare the rural-urban dynamics. So it was the right moment for us to introduce in Ghana. The economy was right. The digital environment was also right.
Okay, so in Kenya, yes, the government does subsidize some groups, so students through the Edu Afya scheme, Linda Mama, for pregnant women, and also some targeted poor households. But that has not really been effective, and that is actually one of the main reasons that the expert panel was formed to look into that. And so we've been studying different models like Ghana, like India and Thailand. We actually even went to Thailand, and what we found is that there's no social health insurance scheme that has ever achieved 100% coverage using contribution mechanisms. It's never happened. It's always through tax. And so we've studied other countries, and definitely we have seen that, if universal health coverage is to be achieved, the government will have to provide those funds.